because I was actually kind of prop trading from an early on period of my trading career. And I wasn't heavily reliant on order flow. So when I made the transition off the floor, it was fairly seamless.
Hello, everybody. This is Anthony for Investors Underground. In this episode, I have the opportunity to speak with a highly regarded member within the IU community who has over 20 years of experience trading in a professional capacity. You may recognize him from the chat as Larry D. Larry began his career trading on the Pacific Coast Stock Exchange in 1987. He became a specialist and market maker until the exchange closed in 2001. He then went on to trade the Boston Exchange remotely until 2003, and shortly afterwards joined a prop firm where he traded for nearly a decade. Today, he trades his own accounts. It's my pleasure to welcome Larry D. Hello, Larry. Thank you for being here and taking the time to speak with me today.
Thank you, Anthony. I appreciate you having me on.
Absolutely, and I'm happy that you've come on and we get a chance to discuss your trading background because you have so much experience with trading. The first question that I had was, what got you interested in trading? How did you hear about the market and what was the allure to it all for you?
Back when I was a kid, 5, 6 were some of my first memories. My dad would take me down to downtown LA where he was a stockbroker at the time, and I'd play around with the Dow Jones machine. That was kind of intriguing to me, but for the most part, I would go up and down the elevators and didn't really, have any idea what he was doing. But eventually, my brother became a clerk on the Pacific Stock Exchange, and I went down there in the early '80s and was just amazed by all the activity, and you're basically walking through paper that was up to your knees. It was, something else back in the day.
So you come from a legacy, as it were, of traders. What was that like? Did you learn some of the early ins and outs of the business at an early age?
Well, I used to hear my grandfather, who came out from Kentucky in 1922 to California after he was in World War I. He was in France when the armistice was signed, and then graduated from UK, came to California, and his first job was working on the Pacific Stock Exchange as a guy putting up trades on the board. Probably the lowest paying job on the exchange at the time. And then he eventually became a stockbroker and was in the business until he retired in the 60s. And I used to listen to my parents, my dad and uncle, who was also my mom's brother, was a stockbroker, and they'd always talk about the hot stock or the what stock they were going to invest in. It wasn't necessarily trading, but that's kind of what I grew up listening to as a kid. My dad was in the business as well. After he got out of the Navy, he was a stockbroker from the late 50s until the early 70s, when a lot of brokerage firms were going out of business because they were converting over to computers, and it took a lot longer and a lot more money than anticipated. So I think my dad was with four or five firms in his last 4 years as a stockbroker, and then he moved on to a different business after that.
Incredible. And did you feel any pressure to trade or to become a trader or to become a great trader from your family? What was that like for you?
Not at all. I really didn't have any. I just was always interested in the market, but I never really knew that was something I was going to do. Even in college, I had no idea what I was going to do, and I wasn't studying anything to get me ready to become a trader. And I don't really think there is such a thing. Especially at that time. But it wasn't until I got a job on the Pacific Exchange and started right before the crash of '87 that it was just exhilarating, and the energy and the kind of community of traders and clerks and was really intriguing to me. It's a lot like being a professional athlete as a market maker. I think there's a lot of you have to have a strong belief system in yourself, and um, eventually I became a specialist after 5 years as a clerk. Specialist posts don't open up very often because they're you know the specialists are usually making a fair amount of money at the time, and they don't want to give up that position. They either retire or pass away before they give up that post.
So, Larry, what was it like for you when you first started out on the exchange? Do you feel like from your family history you were kind of prepared for some of the things you would see, or was it kind of brand new for you and you just had to learn from scratch?
I mean, it was totally brand new, but I think I probably had a little better clue of what was going on about the stock market than most. Starting out on the floor, but it's kind of learn on the fly. And fortunately, I was surrounded by some great traders, and they were technicians that did a lot of charting, and I learned through them, and also other people on the floor that were great traders. And back then you got your chart books on Saturday, and you got a ruler and a sharp number 2 pencil out, and you started drawing lines. And it wasn't probably until the late 2000s or late 1990s that we started being able to look at charts on the internet, and being able to throw away those old books.
I know you mentioned being a specialist and a market maker, so I wanted to dig in a little bit to what those jobs entail, because I can imagine some people have a perception or maybe a misperception about what a market maker actually does. And so for someone who's actually done the job, I'd love to hear a little bit from you, at least at that time, what that job entailed, on a day-to-day basis, and what would make for a good market maker.
Well, I think back in the day, going back in time, it was always the specialist's responsibility to kind of add liquidity to the market when there wasn't liquidity. But mainly the New York specialist it's a whole different ball game with the New York specialist, because they see the lion's share of the order flow, and we're just kind of, as a regional specialist, you're tracking and shadowing the New York specialist, and in a way we're adding liquidity, and we're getting inside his bid or offer to be able to tighten up the spreads. And we had something called ITS, which was inter trading system that connected all the exchanges. And back in that day, there was no pre-market trading. The specialist got the order flow. If he had a big imbalance on the sell side or buy side, he had to send out an indication to every specialist in that stock saying, "Hey, IBM is indicated here." And then through ITS, you'd put in staggering bids or staggering offers. As the higher the price would open, you may be willing to sell more stock at that level, or buy more down much lower levels. So that's how the day started. He was responsible for opening the stock on a timely basis, and also closing it on the timely basis. But as a regional specialist, your job is to execute the orders that are coming in, or orders that are on your book, on a timely basis. And if you get a market order, depending on the market conditions, if I got 10,000 shares, I may send 5,500 at the market back to New York, and get a price, and then sell the rest, position 4,500 for myself, or send 100 shares and try to get hopefully the specialist in New York would give you a bad price, and you get to sell the other 900 at a much higher price. So that was there. Certain specialists were always kind of looking to screw the regional specialists, or not give them very good prices, or not honor their quotes, which was a big battle all the time. You had to say I was offering 5,000 shares at $100, and the New York specialist traded through my offer. He had to either change his price that traded through my offer, or honor my 5,000 shares. And sometimes it would be 10, 15, 30 minutes before they, where you'd see a little 5,000 share order at $100 come in, and at that point you could decide whether not to sell the stock. It could be trading point higher. So that was one of the few advantages that we had on the regional on the P coast.
Interesting. And so it sounds like you weren't just competing against necessarily other traders or participants in the market. You were also dealing with other exchanges and other market makers as well. It seems like it could be a pretty stressful job.
Yeah, we also had to deal with Bernie Madoff's, the Cincinnati exchange, which, you know, you, our job as a specialist was to try to price improve every order that came in, and the better price improvement numbers you had, the more likely you were going to get a new issue stock, and or whether it was Fidelity or Dean Witter or Schwab, you know, um, they would send the order flow to the exchanges that normally provided the best price improvement. And the Cincinnati exchange, which was Bernie Madoff, their price improvement numbers were unbelievable. And as market makers, we saw that they were not, they were trading through offers all the time. So we couldn't believe that they had such amazing, price improvement numbers. So it was a little telltale sign that he wasn't on the up and up. Maybe, tip off way back before the House of Cards.
Were there other lessons that you learned in that role as well that were able to assist you throughout your career in trading?
Well, in hindsight, it was probably good for me that my post wasn't. I think at the time I had maybe 25, 30 stocks that I was making markets in, U.S. Marathon, U.S. Steel, Tenneco. I had Food Maker, which was the parent company for Jack in the Box, which had, was probably the first real excitement I had in my post when they had the E. coli breakout in Washington or Portland, and the stock I think went from like 11 to $5 with tons and tons of shares trading at the time. But for the most part, I didn't see a ton of order flow for the first half of my career as a specialist. So I was creating a lot of my own, positions, whether by sending a market order on one of our machines that you could send orders on, or by making a market and having one of the regional exchanges come out and take or hit my bid, take my offer, hit my bid. So it was fortunate because I was actually kind of prop trading from an early on period of my trading career, and I wasn't heavily reliant on order flow. So when I made the transition off the floor, it was fairly seamless.
Interesting. And so when the Pacific Exchange closed, you started working at the Boston Exchange. What was that like? Were there major differences between the exchanges, or for the most part, was it the same? And were you doing the same type of job for the Boston Exchange?
It was the exact same job, and it was a seamless transition. But the only big difference was that we went from sixteenths increments to pennies. About that time, I think maybe we might have had pennies near the very end of the exchange. I'm not exactly positive when that it was around 2000, 2001 that happened. And so, your margins overnight dropped, I think 86%. Instead of being able to sell it at buy it at a 16th, sell it at an eighth, or sell it at 3/16, you were buying it at a penny and selling it at 2 pennies kind of thing. And the spreads, tightened up, considerably, and it no longer became an advantage to be a market maker at that point. I was at some days I was seeing 1,500 orders, which is nonstop barrage of orders, and trying to make a decision on every one, whether you take the trade, go with it, or just lay it off. You kind of, after a while, you figured out, some of the smart orders, they were advantage. It's like, oh, this guy's always right, so I think I'll go with that order. But I was in discussions with my manager and the company I was trading for. I was with D.A. Davidson at the time, and Um, we eventually, went our own ways, because they didn't want to be in the market making business anymore. And we had like 16 guys trading on the Boston Exchange. It whittled down to four or five, and it was just my brother and myself at the end. And then we went to a different company, and we're on that prop desk together.
Yeah, and I definitely want to ask some questions about the prop desk experience that you had. I guess the last question I had to wrap up about market making was, do you believe there are any myths that exist about market makers and what their role is, that people might understand them to be, either back then or that exist today?
Um, I think for the most part, I don't think there's really too many myths. I think many have been debunked, but for the New York specialists held all the cards. I mean, they had the majority of the order flow. They knew the players. They knew, that somebody had 1 million shares to sell, or they were trying to work 10 million shares or buy 10 million shares. So they knew where to be positioned. So you kind of had to try to get in the mind of the New York specialist and figure out where he's trying to take the stock. We also had another system that was a great tool for us. It was, Instinet. And Instinet, you know, my brother was a market maker in Oxy Petroleum, and there would often be size orders to buy or sell that would come across on Instinet, and all the traders that had Instinet would immediately start banging bids, shorting the stock. You couldn't short on a downstick, but on a downtick, but you would try to get short, or you just wait until that order went from 1 million to 700,000 to 300,000, and then all of a sudden all the traders come in and gobble up the bottom of the order, and the stock would immediately bounce. It was slam dunk.
And following volume in that way, is that still something that is part of your trading style? Or is that something that just worked at that time in the capacity as a market maker?
No, I think volume is kind of, you know, it's paramount. I mean, I think they're able to kind of have false volume today versus back then. I think guys are able to trade amongst themselves in various accounts and buy and sell from each other, possibly to create volume in some of the low float stocks, thinking that there's a lot of interest in those stocks. And, it's just a house of cards waiting for, all the traders to get excited and load it up, and before they pull the rug on those kind of companies. But for the most part, if you're looking at a stock that has over 100 million share float, and you're seeing the thing trade, 5x, 10x normal volume, it means a lot. And I like to get, I like to momentum trade, if there's volume coming into, like in the last few days, SOUN, I like to try to ride that long. But markets are a lot different in that way, whereas they have these little 20, 30 cent pullbacks all the time. Whereas back, I think before 2000, stocks traded much more in a straight line up and much more in a straight line down.
Okay, great. And I know you traded after you worked on the exchanges, you traded and worked at a prop desk. Can you talk a little bit about what that experience was like? I realize that was some many years ago, but what was the experience like in terms of, getting trained or receiving education from the prop firm? Did that happen? What kind of, technology? Was there any particular technology that was helpful in the prop world? And what was it like trading in person with other traders again, but in a different sort of capacity?
Well, it was much different than the floor, and a lot of the traders that were good market makers and made a fairly good living on the floor, when the exchanges closed, a lot of them went on to different businesses, and they many were reliant on the order flow. They had some of the specialists had some great order flow that was very lucrative for them, and they just wait for order flow to create a position. Um, there wasn't much, so when the floor closed, there weren't too many opportunities out there for traders, but this firm wanted to have a prop desk and brought my brother on and myself and a few other traders that had been in the business for 10, plus years at the time. And we were on the same floor as the bond market, which was kind of in a separate corner of the same floor. And then we had the order desk that, all on the same floor. The order desk was for the brokerage firm's clients that, came in with buy or sell orders on, what various stocks, a lot of the regional or the local issues that, trade 1,000 shares or 10,000 shares in a day kind of thing. But there wasn't any training. You kind of came with what you knew, and it is basically like Al Davis, just win, baby. There wasn't, you really didn't have a manager on the floor, following your trades. You had X amount of money to trade with, which is a huge advantage of being on a prop desk or having a firm backing you financially, because you were able to trade with a lot more money. But the downside is they're sharing in the profits, and then you're also sharing, the government is sharing in your profits. So you get cut a couple times before you get your own check.
Was there high turnover at that time in that prop firm?
Now it's basically 4 or 5 of us that were on the desk and remained on the desk until they shut down that operation. And then my brother, went on. It was about 2010. My brother went on to went to the dark side and became a financial advisor, and I continued to trade.
To this day, you still trade your own account. Can you talk a little bit about what that experience is like now that you're on your own, not in a prop firm, not as a market maker? Are you noticing a lot different style that you have, or is it still very similar to the style that you had, back when you were at the prop firm?
Well, I think as time has gone on, you have the quant funds, and you have the high frequency traders that completely change the market, and it's a lot of the volume that we see on a daily basis is not real volume, not real people investing in the market. A lot of it's trading or people trying to add liquidity and getting paid for adding liquidity to the market. The stocks move in a different way than they used to. I think right now, personally, I think this is one of the best markets, I've ever seen in 30 some odd years. I mean, the cost to trade is literally nothing, unless you're out there getting locates for borrows on hard to borrow stocks. But if you're playing from the long side, you basically are trading for free, and you can get in and out. You don't have to worry about, I had probably over $50,000 in overhead from order flow arrangements when I was on the floor to various things I had to pay for, and now it's minimal.
What type of stocks are you most interested in trading these days, and what does it take in terms of a setup to get you interested to possibly even take a trade?
I'm trading the artificial intelligence stocks and trading the weight loss stocks, going where the volume is and the biggest beta, highest beta, movement. SMCI trading, with NVIDIA or AMD or, Micron Technology, which was until recently was kind of trading the opposite direction of the group. But for a while it was SMCI that was leading NVIDIA and leading AMD and leading ARM. It kind of took over as the leader, and they kind of, all those other stocks started following SMCI when it started moving up.
And how do you find certain stocks or themes that you might want to trade? How do they come up on your radar? What's that process look like for you?
Well, I use Finviz or TC 2000 free stocks, or using my trading platform. Uh, Looking at on Finviz, I'll do a filter where I only want to see stocks that trade over 2 million shares that are trading over two times normal volume kind of thing. When I see high volume and big movement, uh, and then they go on the list and try to taper it down. Also using IU, which is a phenomenal tool, with Nate putting out his list the night before, and having the morning call, and with Stan doing the midday call. It's it's a great community. And prior to that, I was basically trading in a black hole. You're just a trader by yourself with the screens. And it reminds me a little bit of the Pacific Stock Exchange, where you had the floor, which is the momentum trading room, where it's all business and on that chat. And then you have the other trading room, where you can kind of joke around and kid with people and have some fun, in the lounge. So it's like going off the floor into the break room and shooting the shit and getting a snack. And but there's also some good ideas in that room as well.
Whether you're looking to trade alongside an experienced group of traders or connect with the latest proprietary trading technology, Investors Underground has something to offer traders of all skill levels. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. You'll also have access to the morning broadcast, where Nate and the moderators share their trade ideas for the day ahead during the pre-market session. You'll have access to the midday sessions with Stan, the midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Larry D. What recommendations would you give to those who are just starting out trading and might have found IU and they're just joining the chat?
Well, I've talked to people who are starting out in trading, and the first thing I would tell them is to go out and buy the Investors Business Daily. Study that as much as you can. Look at the stocks that are in their IBD, top 50, top 100, whatever. Look at, go on to Finviz. Pick a handful of stocks to follow them. All doing this before you ever even think about making your first trade. And then after you've done that, maybe, scour the internet for, the most watched traders that put out videos on their trading style and their setups, and kind of find a few setups that might work for your personality. Some people, I rarely carry positions overnight. I rarely swing trade. And if it's a swing, it's basically overnight. It's gone in the first half hour of the next day. But it's also a pretty small position. After doing all that, and you've studied the market, and you think a little bit about trading, I would go onto a simulator and do that for a month or two, and try to make it as real as possible. Every time I get on a simulator, when I'm trying to buy some time in the day when there aren't really many setups, and just trying some things out, next thing you know, I've got 2 million shares of a $5 stock, and that's not real. So you got to make it as real as possible, or you're wasting your time. And then make a transition to, when you start trading, just trade 100 share lots. I mean, 100 shares, and have 10 share increments. It's like start out with 10 shares, kind of get a feel for whether that setup was right or wrong, and then if it starts working for you, go all in with the other 90 shares, or go in with another 40 shares, and do that for a while until you really feel like you can trade, and then maybe step it up a little bit more. But to jump all in at an early stage of your trading career is disastrous for most. You got to really build some stepping stones before you start sizing in positions, I think.
Speaking of sizing into positions, is that something that you still do to this day? Is sort of just, wait till the trade is working in your favor and then really lean into it, scaling in and scaling out? Is that how you tend to enter and exit your positions?
Uh, I do, I try to wait as long as I can on the exit, but the scaling in, a lot of times I want to jump in and, it's like the stock looks great. It's going straight up. It's got another point or two in it. And so you jump in with a, sizable position, and next thing you know, you're a bag holder. And if I had just started with five, an odd lot, you know, you know, and just kind of take a breath, and the move is not going to happen in 10 seconds. If it's really going to move a dollar and a half, you got plenty of time to establish that position and make money. You may miss out on the first, 15, 20 cents, but you're going to be saving yourself a lot of money in the long run. And so I may go in with an odd lot to 200 shares, depending on the stock, and then, go in with another odd lot. And if it's still kind of doing what I think it's going to do, then I'll get more aggressive. And, that's also that, getting out of a position is sometimes a lot harder. It's getting out of position. It's easy to get in a position. It's a lot harder to get out of a position. And, you didn't used to have, stocks that would trend, down, 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 and then turn on a dime and never have a down tick again the rest of the day. I see that all the time. So you got to have, be quick making that decision when to exit that trade. You can always get back in the short, or in the long. Just clear the decks, take a look at it, reassess, and if it necessitates getting back in on that trade, do it. Or just let it come back to a level that's a decent setup for you. But it's, to me, a lot of the volatility is in the reverse trend. You see it all the time with stocks, like an Nvidia, for example, where they will kind of be down, down, down for the first half hour, 45 minutes, and then when it breaks that kind of steep downtrend, you have a kind of a blast off scenario where all of a sudden now it really gets moving fast, on the turn.
Speaking of shorting and going long, what sort of percentage would you say that your trades tend to be short based versus going long on a stock?
Unfortunately, I kind of was trained as a counter trend trader, and so you're on top of being a momentum trader. There's a certain point where it's like, this thing has run long enough, and it's got to have a little pullback here. But if you, in hindsight, you look at SMCI, you look at their earnings, you look at Nvidia's earnings, going back to the fall of 2022, and you look at the progression of their earnings, and it should have been a buy dip stock all the way up to where it is today, basically. But certainly there are even the great stocks, and that's why you can throw the fundamentals out the window when you're day trading, because you can't sit there and rationalize, oh, I'm going to buy Nvidia here today on this little pullback because I think it's got great fundamentals and it's a great stock and it's going higher. You still have to have your loss limits in place and get the heck out of it, even though as a trader your mind's going up, this is a great stock. This is the next level. It can't go lower than that. And then this is the next level. It can't go lower than that. And so, that's when start having, big losses. And, certainly I've had many of them in my career. And probably will continue to. We're humans and prone to making mistakes and get emotional. And I grew up playing a lot of different sports and very competitive, and you hate to lose. And if you feel like you're in a bad position and you sell it out at a loss, that you're a loser, or you're never. But it's just a stock. It's just numbers, and don't get into battles don't get personal with certain stocks. You just move on to another stock that's moving. It's just all about numbers, and don't get emotionally attached to certain stocks because they owe you one, or which can happen. It's like, I'm going to get it back here today on this stock, but it's a bad trap to get and bad habit to get yourself into.
Yeah, absolutely. Do you have any particular rules that you put into place in order to keep your risk management in check? And also, based on what we're talking about, any rules to keep your psychology in check so that you don't start revenge trading and just taking a loss too personal?
Well, in a perfect world, you enter, create a position and you put in a hard stop right away, and I'm willing to lose this, and that's it, and go on your merry way if the stop gets executed. Sometimes I'll enter a trade and have a stop in place. I'm willing to lose 20 cents on this, or I want to know I'm right or wrong pretty quick. And if a stock has made a big run, may continue to make new highs, and it's kind of leveling out, and I want to put on a short near the highs of the day. I could have a 6 cent stop. It's like, I'm thinking this is going to turn here, but if it goes back and makes a new high, then I'm out. But it's kind of a high risk reward. I think I could, make $1 or two if this thing turns on to the downside, or I'm willing to just lose the 6 cents and move on. But that's in the perfect world. You're putting your hard stops in, but sometimes we feel that that the market's trying to chase the stops, and you're going to get stopped out on a good position, and you can't really think that way. You just got to have the hard stop in there, and not, if it gets elected, it gets elected. If you need to get back in, if setup changes, get back in. But for me, if I could have eliminated all the bad losses in my career, life would be quite a different story. I mean, it's all about reducing the losses or keeping losses to a minimum. Because most traders that have been in the business a while, there's going to be plenty of upside trades. There's going to be plenty of winners, but you can easily wipe out 10 days of great trading in one day if you're not using good risk management. And all that, the risk management, a lot of people get into the position in a stock that maybe not, every $10 stock is not the same. Some $10 stocks, if you have 1,000 share position, that's a huge risk, whereas another stock at $10, it's no risk at all. So you got to know what you're trading, and have a hard stop on your losses. You just gotta move on to something else if it's not working. And it's something you got to work on a daily basis, because you can easily either be tired or have a strong conviction today in a certain stock that it's got to move, or this is in a group that's really strong and it's got to join the group, and it's not. It's going the opposite direction. It's like it's got to join the group. It always does, but sometimes they kind of throw out the carrot, dangle the carrot with other stocks that get you trapped in in another stock in the same group.
What would you say are some of the keys that you've learned over your career to being able to have longevity in trading?
I think part of it is never losing confidence in yourself, as a trader, and when you are in a slump, which you're undoubtedly going to have as a trader, just ratchet things down, cut your position size, by 75%, or take a few days off, or, just change things up. But, Babe Ruth went into some pretty good slumps himself, even though he was one of the greatest home run hitters of all time. Uh, sometimes certain markets don't fit your eye. Sometimes it's you know, sell into rallies. Sometimes it's buy into rallies. Sometimes it's, you know, um, chasing shorts. Sometimes you got to catch a falling knife. But every market's a little bit different, and every day is a little bit different. It's like playing a different team every day, and a prior day's action in the stock does not mean it's going to do the same thing the next day. Sometimes prior day is a big setup for failure the next day, or an exact opposite move. And that can also play tricks on your mind. It's like, oh, this thing has been to buy for, there's buyers out there. It's accumulation. Looks great on the chart, and then traders can make all kinds of excuses for holding on to a position too long. But my best advice is to reassess, get out as fast as you can, and go on to something else. Trade a different stock. Don't be fighting the same battle every day with certain stocks.
Okay, great. Thank you. And can you talk a little bit about how having either a set of traders that you can bounce ideas off of, whether it's a community like IU or other traders, you worked on the floor and in a prop firm, but also, I know you mentioned that your brother's a trader, or, having family that you can talk to about an idea, or, when to stop a trade, something like that. How important has that ability and that resource been for you to be able to, talk with other people and have sort of a pod or a group, a collective, so that you're not just trapped in being narrow sighted with your one trading idea and doing it all by yourself?
Well, my brother and I talk a lot. Like I said, he's a financial advisor, and he does a lot of covered calls, and which is a labor intensive, style of being a, financial advisor. But we talk about the market a lot, but the IU community is a great community for that, and it's gotten me out of that black hole as far as being an isolated, lone wolf kind of trader, where you're able to bounce ideas off guys, or just listen to what their thoughts are on certain stocks, and maybe it confirms your belief in the same stock. But sometimes when you got the whole herd thinking the same way, and that's also helpful to kind of read where everybody is in IU on certain stocks, because sometimes you want to be doing the exact opposite. Not saying that there's a lot of great traders at IU, and Nate obviously is one of the best traders I've ever seen. He has a kind of sees all, and can really pounce on stocks when the time is right. But it does help to kind of think about where the herd is. What are other traders doing? And if you think everybody is long, a lot of times it eventually is going to turn and go the other way pretty quickly if the herd's long, or if they're short. That's SOUN. There's probably a ton of people short that stock for the last week or two, and I don't know where it's trading now. I know it had a big rip and dip shortly after the close going into earnings, but that's wheelhouse stock for me to trade, that kind of movement, lower price stock with great volume, great movement.
Great, thank you. And I think that's great advice across the board about not just being a lone wolf trader, but also being cautious of what the herd is doing, even if it's a herd of really good traders as well. Larry, if it's okay with you, I'd love to go through sort of a lightning round set of questions, just quick questions and pretty quick answers. Is that okay?
Love to.
Awesome. The first question that I have is, what do you consider to be your greatest strength as a trader?
My focus and enthusiasm for the market.
If you could go back and give yourself one piece of trading advice at the start of your trading career, what do you think that would be?
I'd say study more of the psychology of trading as along with the technical aspect of trading. That was something back in the day that was you know not many traders ever talked about, and it's something that I'm still learning.
For traders who might be struggling in their career right now in 2024, whether it's they're having a drawdown or they're still not finding consistency or breaking through to profitability, what advice would you give to those traders?
I'd say take a breather. You know, uh, I would reduce your trading size drastically until you start feeling the flow of the market again, and do a lot more studying of you know what kind of market are we in, and what's working, what's not. Are we buy the dips or sell the dips? Are we there's buy the rallies or sell the rallies? You got to identify what we're in a bull market, bear market, or if certain sectors are in bull markets or bear markets, and try to trade accordingly. If you're fighting the trend all the time, you're going to have you're going to struggle. And I think that's where a lot of traders' struggles come from, is fighting trends. Fighting an Nvidia that's gone up 700 points in less than 2 years. Fighting an SMCI that's gone from 300 to 1,080 in a very short period of time.
And on the flip side, what advice would you give to traders who are doing exceptionally well in 2024?
Well, that's a lot of times your worst trading is followed by some of your best trading, and when you get overconfident or you have a lot more money, you feel like say you're up X for the month or up X for the year. It's like, hey, I've got a lot more leeway because I've been so profitable. Well, that's when the big losses come in, when your mindset is that way. You got to stick to what every day is a different day, and stick to that same process, and limit your losses, and let the winners ride. Cut your losses quick.
Are there any areas of your trading that you're working to improve on actively this year?
Well, I'm always working on risk management. I think that's something every day that traders battle with. Also, trying to understand more of the psychology, of trading that allows us to make mistakes and allows us to stay in positions longer than we should, and break our risk management rules. Um, you know, Humans are always trying to roll stop signs and do various things that break stretch the rules a little bit, and it's no different in trading.
What's the best piece of trading advice you've ever received or ever heard?
Pressing your winners and cutting your losses. You don't be afraid to take a quick loss.
Is there anything that you do away from the trading desk that you believe helps you as a trader when you get back to trading?
Golf is one of my passions. I love fly fishing, love hiking in the local mountains. But golf is, you can relate a lot of things in trading and in life, and golf. They are all kind of interconnected, and it's like if you hit a bad shot in the woods, make sure you just bump it back in the fairway, and take your medicine and go on to the next shot, kind of thing. It's the same thing in trading. Take your loss, go on to the next shot. it's a great way to kind of just clear your mind, get outdoors, take your mind off of trading. Your brain needs a rest from, scouring charts and you need to have a life outside of trading.
For those listening who would love to learn more about you, how you trade, or maybe even contact you, how can they do so?
They can contact me in IU, um, which, as I mentioned, for those who are listening to this and are not um, in have a monthly subscription to Investors Underground, it's well worth looking into. I've talked to young traders that say they can't afford to have a monthly subscription, but to me, it's like you can't afford not to have a monthly subscription to something like this. Traders Community. It's an incredible tool, and I think there's a lot of great people in the community that can help younger traders try to off to a good start instead of starting behind the eight ball.
Larry, thank you so much for taking the time to speak with me today. I have found this to be a beneficial interview for myself, and I hope others listening feel the same way.
Appreciate it, Anthony. It was great being with you. And one little tidbit about Anthony and myself, we actually kind of grew up about a mile from each other. And he was one of the first pioneers to leave California and move on to greener pastures. So it's been great being with you, and hope to see you back in California someday.
Absolutely, Larry. It's great to meet you and get to speak with you face to face like this. And I can't wait to go and visit back in California, back home, and get to meet you in person and keep talking to you then.
Thank you, Anthony. Appreciate it.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.